I do think Bitcoin is going to correct, but let me say, I think Bitcoin is going to drop more than 30% at some point in the future because I think it's going to appreciate that much. Bitcoin is volatile. Volatility is life. Listen, if you guys think about in medical, when you go to the doctor, they check your pulse, they check your heart rate. What does a healthy human look like? It looks like this. It looks volatile. It means you're alive. Volatility is life. What does a dead person look like? No volatility, no life. So I think Bitcoin remains volatile, especially to the upside, which implies also a little bit to the downside. So is 30% possible? You bet your butt it is. But that's because we're going to the moon first.
Strike CEO Jack Mallers, who is curious and vocal, recently gave a bold and compelling speech about the future of Bitcoin. Mallers expressed his thoughts on the direction of Bitcoin through the end of 2024 and beyond. He is well known for his enthusiasm and profound comprehension of the cryptocurrency's revolutionary potential. Mallers discussed how the 2024 halving event and growing worldwide popularity might propel Bitcoin to previously unheard-of heights, reinforcing his unwavering trust in it as the final monetary revolution. Although he advises against anticipating instant fireworks, he believes that before the end of the year, Bitcoin will test important resistance levels, opening the door for a possible spike toward $250,000 or more in 2025. He has a bold, yet realistic vision, showing how the finite supply and rising demand of Bitcoin may usher in a new era of price discovery fueled by institutional and public interest. Watch till the end as we delve into Mallers' latest insights, but before we do, please don't forget to like, subscribe, and hit the notification bell for more exclusive content. Now, let's dive into Jack Mallers' perspectives on what lies ahead for Bitcoin.
Why isn't the price going up even though Saylor bought $5 billion worth of Bitcoin? Who's selling right now? That is a good question. Now listen, people ask me all the time, Jack, why does the Bitcoin price go down? Well, it's very simple. The Bitcoin price goes down when more people are selling than buying. The Bitcoin price goes up when more people are buying than selling. That is a joke, but it's the truth. That's what a market is, especially a free one. Bitcoin's the most free market in the world. It's a return to first principle thinking. It's back to the basics. Bitcoin goes down when more people want to sell it than buy it. That's what happened this weekend. That's what happened today. Now, why would these people want to sell? I don't know. You'd have to ask them. But if you're asking me to guess, here's my best guess. Let me give you guys some quick alpha, some quick expert insight and expertise. There's been 4 Bitcoin halvings in the history of Bitcoin. Your boy, aka me, aka Jack Mallers, has been in 3 of them. 3 of them. So I've been around a long time. Let me tell you something. This is what always happens. When Bitcoin goes through a halving, that means the new supply of Bitcoin is cut in half. That means the mining reward, the reward miners get for producing new Bitcoins and finding Bitcoin blocks gets cut in half. That means if the Bitcoin price doesn't double on the day that their reward gets cut in half, they start losing significant amounts of money. Now, did Bitcoin double on the halving day? No. Bitcoin, in fact, stayed around the same price range for all summer, right? If you guys remember, Bitcoin was jumping around between 40 and 60,000 for many, many, many months. Now, if you take half of a miner's revenue, half of their money away, what's going to happen? They're going to get in a lot of deep trouble. I was going to curse, kid show. They're going to get in a lot of trouble. So what we see through every post-halving cycle in Bitcoin is a lot of businesses and a lot of miners become distressed. And what happens when these miners become distressed? They start becoming Bitcoin sellers. They're taking their treasury, they're taking every single Bitcoin they mine, and they're selling. Just for simplicity's sake, let's say every single miner pre-halving kept half of the Bitcoin that they mined and put it away for savings, and they sold half of it for expenses. Well, after the halving, if you cut it in half, you're taking away the Bitcoin that they can save, and they're just selling it all. And then they're taking the treasury that they were saving, and they're selling it all. And so usually you see distressed selling post-halving, and that lasts, 6 months, 9 months, and then Bitcoin goes when it runs out of sellers. So that's for one. And the other is, I think $100,000 is a significant price for Bitcoin. I think you're going to see a lot of sell pressure there because it is such a round number. The biggest sellers in every Bitcoin bull run are profit takers. You always, and we can see this on the blockchain. We can see this with data, is you always see OGs, early folks like myself that bought Bitcoin at $10, $50, $1,000 taking profit. Am I selling? Did I sell any Bitcoin over the weekend? You guys know the answer to that. No, I didn't sell any Bitcoin, but we can look at the data and we can see that other people did. We can see that other people did. So I think it's a combination of resistance at 100,000. There's a philosophical resistance, mental resistance. There's also physical resistance in the order book. And I think that there's a lot of distressed businesses and miners out there that are living in a post-halving world that are trying to make ends meet because Bitcoin is not in the hundreds of thousands of dollars yet. That's my answer. I know it's a popular question, but that's my answer.
Jack Mallers recently talked about how Bitcoin's price hasn't changed despite Michael Saylor's enormous $5 billion purchase. He clarified that market fundamentals determine how much Bitcoin swings in value, rising when purchasing outweighs selling and falling when selling takes priority. Mallers identifies two primary causes of the present selling pressure. First, miners are experiencing financial strain as a result of the post-halving dynamics. Many are forced to sell additional Bitcoin, even coins from their reserves, in order to stay afloat after their revenues were cut in half. 6 to 9 months may pass during this selling push. Second, early adopters are encouraged to profit by the $100,000 price level, which serves as a substantial psychological and practical barrier. Mallers noted that these tendencies are supported by blockchain statistics. He is nevertheless optimistic about Bitcoin's long-term prospects, even though these factors are temporarily holding down its price increase. But he also admits that a significant correction, possibly more than 30%, could occur as part of Bitcoin's inherent volatility, which drives both fast increases and decreases. Don't forget to like, subscribe, and turn on notifications for the latest updates. Now let's get back to the interview and hear his following words.
Oh man, the questions keep pouring in. Do you expect the current 4-year cycle to have a pullback of 30% or more? I do. I do think Bitcoin is going to correct, but let me say, I think Bitcoin is going to drop more than 30% at some point in the future because I think it's going to appreciate that much. Bitcoin is volatile. Volatility is life. Listen, if you guys think about in medical, when you go to the doctor, they check your pulse, they check your heart rate. What does a healthy human look like? It looks like this. It looks volatile. It means you're alive. Volatility is life. What does a dead person look like? No volatility, no life. So I think Bitcoin remains volatile, especially to the upside, which implies also a little bit to the downside. So is 30% possible? You bet your butt it is. But that's because we're going to the moon first. That's my answer. What do you think of these collateralized loans with Bitcoin? I think collateralized loans in Bitcoin are a huge deal. Why do I think that they're so cool? Because listen, Bitcoin is close to $2 trillion market cap. That is $2 trillion of new wealth, new capital that's been created for people, right? 15 years ago, Bitcoin owners and holders have made $0. 15 years later, today, Bitcoin investors, holders, owners have made $2 trillion. That's a lot of money that people have made that they want access to, but they don't want to sell the Bitcoin. How do you get access to the wealth without selling the Bitcoin? You get a loan. And that's the same thing in other assets too. How do you get access to the wealth of your home without selling your house? Let's say, for example, I wanted access to this house and its wealth, but I also need to sleep in it. What would I do? I would get a mortgage. I would get a loan. So I think Bitcoin-backed lending is huge. Now, it's volatile. So you have to be responsible. You have to be an adult. You have to do math. Do not do it irresponsibly. Make sure that it's with an institution that you trust. It's not be hypothecating. All of those normal checks and balances. But I think Bitcoin lending is massive because everyone wants to hold Bitcoin. The number one rule, Saylor said, never sell your Bitcoin. But you got to get access to the wealth because there's a lot of new wealth created and people want access to it.
According to Jack Mallers, Bitcoin's volatility is a natural part of its character and growth potential. While acknowledging that the current cycle may pull back by 30% or more, he stressed that this volatility is an indication of a healthy, dynamic asset. He noted that volatility to the downside accompanies Bitcoin's explosive potential to the upside, and that swings mark life and strength, likening it to a healthy human heartbeat. Jack confirmed that although Bitcoin experiences corrections along the way, they are a necessary step on the path to increased value, comparing the process to Bitcoin going to the moon first. Regarding Bitcoin-backed loans, Mallers described them as a huge deal that will help release the $2 trillion in wealth that Bitcoin has created. As he stated, Bitcoin holders can access their wealth without selling their coins, just as a homeowner can access the value of their property without selling their home. He did, however, issue a warning, emphasizing the necessity of cautious borrowing, collaborating with reliable organizations, and avoiding rehypothecation dangers. Mallers sees Bitcoin-backed lending as a game-changing financial instrument that supports the idea of never selling Bitcoin while sensibly utilizing its rising value. Jack Mallers reminds us that Bitcoin's volatility is not something to fear, it's proof of its growth and vitality. What's your take on Bitcoin's volatility and the future of Bitcoin-backed lending? Let us know in the comments below. Don't forget to like, subscribe, and hit the notification bell for more insights from Bitcoin leaders like Jack Mallers. Thanks for watching, and we'll see you next time.